In this video, I'm going to walk you through the interest rates here today in Canada for January 2024. And by the way, you're going to want to stick around till the end because you might be shocked as to where fixed rates are at. Before we get into it, hit that subscribe button, hit that bell icon because you definitely don't want to miss out on future videos as we are cranking out videos every single week here. And every month, we're going to be doing this rate update as well. So if you are someone in Canada who is trying to achieve financial freedom, then you're definitely going to want to subscribe to a channel. So I'm going to share my screen here. And as I do that, I really want to just touch briefly on the fact that fixed rate and variable rate mortgages are hinged on two separate things, right? So we have our fixed and we have our variable. Variable rates are based off of the Bank of Canada, whereas fixed rates are based off of the bond yield. So to really simplify things, fixed rates are more frequent in terms of changes, whereas the variable rate typically changes eight times a month with the Bank of Canada. So that's why you have these different fluctuations. And over the last 4 to 6 weeks, we've seen quite a decrease in fixed rate mortgages. So it's a really cool time to lock in some mortgage rates right now because we are seeing the rates decrease, and really the media is not talking about it. So here we are. I'm going to break this down into three different categories on each slide. We have two slides, A side and the B side. So the A side is, you can think of it as like your big five banks. So the best rates that you're going to get is going to be on the A side. Now, everything I show you here is going to be for a 5-year term. Keep in mind, you have a 1, 2, 3, 4, 5. You have all the way up to a 10-year term. But to get the best rates, typically speaking, a 5-year term is going to be your lowest rate. So the three different categories we have are insured, insurable, and uninsured. With insured, that's going to be your best rates. And that is anything that has less than 20% down. So you're purchasing a property with less than 20% down, or you have at least 35% down or more. That's going to give you access to the lowest rates. So we have a 524 fixed and a variable at 6.3. What is that discount? Well, that discount is what the bank, so the lender, is giving you based off of the prime rate today. So today's prime rate is 7.2. You take that discount off and your net rate is 6.3%. So then we have insurable at 5.34 to 5.49 and variable 6.45 to 6.65. So insurable is anything between 20% to a 34% down. Again, once you go less than 20 or go past 34.9, that's going to give you access to these rates, and you're going to miss out on that insured pricing. But hey, if you're paying for an insured mortgage, you're paying for mortgage insurance, which is a whole other discussion. But that's not to say that you shouldn't go that route. Okay, so then we have an uninsured mortgage, which is typically your highest pricing. So we have a 5.79% and a variable at 6.95%. So the uninsured is beneficial if you want to stretch your amortization up to a 30-year amortization on the A side. On the B side, we can go a bit higher, but the uninsured is for anyone that has a mortgage over $1 million or, a purchase price over $1 million, or that amortization is stretched out. Okay, so that's the A side. B side is we have a 1-year term at 7.19, a 2-year term at 7.14, and a 3-year term at 7.09. So the difference between the two, the B side is for anyone that has bruised credit, is self-employed, where we need to declare their income differently, or you need some exceptions on borrowing, so you can get a higher mortgage amount. That you can do on the B side as well. And typically speaking, the B side only offers 1 to 3 year terms, and there's a few lenders, but most of them don't offer variable rates as well. That's just how it is. So that's the averages for the B side. And I just wanted to keep this video super short. Let me know your thoughts on this, by the way, because again, this is something we're thinking of doing on a monthly basis. So comment down below your thoughts if you want anything added to this, or if you want any further explanation on anything. So if you're someone in Canada who is interested in achieving financial independence, then you definitely want to subscribe to our channel. We're going to touch on things like real estate investing, entrepreneurship, and of course, mortgages. So if any of that interests you, definitely hit that subscribe button, and we'll see you on the next video. Cheers.